What's up, money lovers? Welcome back. So today I wanted to do something a little bit different, have a little fun here. I'm going to be doing a reaction video to Global Money Academy's argument of 7 reasons why you should avoid Tesla stock. I think there's a lot of things wrong with it, and I've just had it with the Tesla slander. Someone needs to debunk it. And I do want to just preface this video by saying I like these guys a lot. I like their channel. You know, they're value investors, but people are just getting Tesla all wrong, and I just want to give my thoughts on it. So let me know what you guys think in the comments below. If you enjoyed the video, don't forget to like and subscribe. Let's jump right into it.
The Tesla stock has continued to defy and baffle even the most seasoned investors. And Elon Musk once told short sellers,
dude, it's gonna sting. That's all I can tell you.
and let's be honest, so far Elon Musk has been right. But guys,
all right, so I agree with them so far. That's about where it ends, though.
Let's get serious. This is 2022. This is no bull run. Stocks are under pressure, and the market is getting beaten like a red-headed stepchild.
All right, so that's pretty funny, but this is where I get confused with, these value investors. This is an argument full of fallacies. Why are you focused on the short-term market moves? If anything, this is more reason to buy Tesla while it was on these huge dips. I mean, I don't see what this argument holds no water.
So if you are invested in Tesla, or if you are looking to invest into Tesla, here are 7 reasons you should consider avoiding the stock in 2022. Reason number 1 is unrealistic expectations. The stock is trading at such crazy high multiples that it is essentially factoring in most of its future value in the pricing today. And this is, of course, unrealized future value. In addition to which, Tesla's market cap actually prices in the dominance of the majority of the automaker sector. To highlight what I'm talking about, let's take a look at the numbers between Toyota and Tesla. Over the last 12 months, Toyota's revenue top line was 242 billion, whilst Tesla's was only 53.8 billion. In terms of net income, Toyota did 21.2 billion, whilst Tesla only pulled in 5.52 billion. And in terms of market cap, Toyota is sitting at 289 billion, whilst Tesla is sitting unbelievably at 1.03 trillion.
All right, let me pause it right there. This argument, I don't know how many times it needs to be debunked. Tesla is not an automotive company. I don't know why we keep comparing it to automotive companies, but I'll play the game here. Tesla, you're paying for growth. Toyota is not growing 50% a year. Tesla is. They're growing 50% a year for the foreseeable future, okay, with no signs of slowing down. And then you accompany with that all the trends, all the movement to ESG investing, to ARK Invest, innovative type investing. So while Tesla grows 50% a year, they're also getting involved in all these other fields that are also trillion-dollar opportunities like AI, like full self-driving, solar panels, energy storage, robotics, 3D printing. The list goes on, but it's a profitable company that you're buying, and they're going to grow 50% a year just in the automotive while all these other things play out.
And looking at the price to earnings ratio, 9.47 versus 203 for Tesla. In effect, what this means is that Toyota did 4.5 times more top line revenue than Tesla. They also did 3.8 times more in net income. However, Tesla's market cap is 3.5 times higher than that of Toyota, and Tesla's P ratio is 22 times higher than that of Toyota.
All right, so we understand Toyota's a bigger company today, and this is the problem when you look at things strictly through the rearview mirror. PE is great and all for looking at the past, but it's not accounting for the future, okay? What is Toyota doing today? They just announced they're finally, I think, going to start making electric vehicles, but all their cars are gas cars and hybrids, which are just gas cars with a small battery. And I don't know if anyone's been watching the news, but Europe, these places by 2030, 2035, the places, unlike the US that are controlled by corporations still, are planning to entirely phase out gas cars. So Toyota has a lot of catching up to do. So just because the last 10 years their revenue was so high, it doesn't translate to the future growth here. Tesla's already growing, as I said, 50% a year.
Now, if we draw the same comparison between Ford and Tesla, you'll see that Ford's top line revenue was 136 billion. Again, looking at Tesla, 53.8 billion. Net income for Ford, 17.9 billion versus Tesla's 5.52. Market cap sitting at 66.7 billion for Ford. And of course, Tesla, 1.03 trillion.
Again, Ford, a company that has a huge ICE business that they're going to have to wind down and move everything over to electric vehicles. I don't think people will realize until it's actually happened and we look back and if these companies still exist or not, how difficult that really is. I don't really know what's harder, a startup with no money that is purely doing electric vehicles, or a company saddled with so much debt that has to now take their entire legacy business, phase it out eventually, while also trying to make competitive electric vehicles that are on par with the competition that's solely focused on that. This also relates back to the innovation stack theory. This is something I talked about in my interview with Antonio that originated from the Square co-founder. A company that is solely focused on one thing, basically, is always going to do better than the competition. So Tesla, solely focused on making electric vehicles and having a 10-year, 20-year head start here now, is going to always have a better model.
P ratio 3.75 for Ford versus that absolutely crazy P ratio of 203 for Tesla. This in effect means that Ford does 2.5 times more top line revenue than Tesla. Ford also does 3.5 times more in net income. However, despite this, Tesla's market cap is 15 times greater than that of Ford, and the P ratio for Tesla is 67 times that of Ford.
Now, when you add to this too, Tesla's high multiple, another fallacy, the multiple is dropping so fast because Tesla is coming into its own here. The multiple right now sits around 206. And with their forward, earnings that they're projected to have here, it's going to drop all the way down to 75. That's around where Amazon traded for a very, very long time. And if Tesla continues to grow at 50% a year, it's going to keep getting cut in half.
So the question is, could Tesla get to 30 billion in annual net income at some point? The answer is maybe. But as an investor, you should understand that with a market cap more than 3 times the size of Toyota's, this is already priced into the stock today. To make this a little clearer, let me explain it like this. If you own Tesla today, you must be very confident that the stock will be worth more than 2.5 trillion a decade from now to get a decent return on your money. My second reason is that many of the subsidies that Tesla gets is starting to fall away. Tesla has benefited over the years from a wide range of subsidies that have directly impacted their financial results. And many of these, including the carbon credits and other subsidies, are either being challenged or are actually expiring at the moment. In 2021, Tesla made 354 million from selling environmental credits. And this is actually 17% less than the year before.
This is all irrelevant. The amount of money Tesla makes from these carbon credits is irrelevant. But you know who it's relevant for? All the legacy makers who, on top of all the debt and money they're paying, have to pay this money because they are emitting so much pollution. As you can see, other automakers actually have to pay Tesla this money. So it's hurting their bottom line and it's helping Tesla maintain their lead and just get further ahead. Other automakers, this article is from 2020, paid Tesla a record $428 million in 1 quarter. They had to do this in order to comply with emission regulations around the world. This is irrelevant, and it's interesting. He just said it. They are getting 17% less. So the carbon tax credits are already going away while Tesla is becoming more and more profitable every year. So so that argument just negates itself. They don't need it. It's proven.
In addition to which, Tesla is losing the $4,500 EV tax incentive, as this incentive is now exclusively reserved for union-made vehicles. And since Tesla is non-unionized, this credit won't apply to them. My third reason is that CapEx is absolutely killing returns. In fact, the growth of Tesla requires such a huge amount of capital expenditure that there really isn't much left over for shareholders at the end of the day. Over the last 12 months, Tesla has spent 7.3 billion on capital expenditure, which is only slightly lower than the 9.9 billion it generated in cash flow from operations. This leaves free cash flow of only 2.6 billion over the last 12 months.
All right, let's stop it right there. Tesla's probably the most capital efficient company, getting some of the best return on their invested capital. When you take into consideration, this company has been in the process of building 2 ginormous gigafactories, factories that, let me mention, the legacy automakers are also going to have to build, or at least gut their entire, factories that are suited toward building ICE cars, because you don't need any of that stuff anymore. Tesla's got the most efficient factories, and they managed to do all this while still turning a 30% gross profit margin on their vehicles.
And at a market cap of 1.03 trillion, This is a price to free cash flow of over 400.
This is a ridiculous metric. It's a growth company. They're plowing all the money back into the business, obviously, and this free cash flow is actually growing at a pretty high rate.
And I'm afraid the story only gets even worse because Tesla only generated this free cash flow because it has grown its accounts payable and accrued liabilities of 2.7 billion this last year. What this in effect means is that Tesla will have to pay suppliers and employees eventually, making the 2.6 billion in cash it generated unavailable to return to shareholders. My fourth reason is increasing competition. In fact, EV sales topped 2.6% of all sales of vehicles last year, and this means that most of the traditional automakers are paying attention, and most of the traditional automakers are now preparing to mass produce EVs in the next couple of years.
Oh dear God. It's like beating a dead horse with the increasing competition argument. I mean, do I even need to talk about this one? I mean, Apple's got competition. How did that work out with the iPhone? They still have the majority of the market, and they may even have less than it. Even if they only keep 40% of the market, they're doing just fine. You think about what is the appeal of the iPhones? Well, they were the first one. They swallowed up market share. Now they have so many other advantages. They've got a very strong branding and pricing power that just enables them to crush the competition. When you tag on, there's a cult-like following with Apple as well. I mean, there's a reason why it seems like all your friends have an iPhone and not other types of smartphones. The competition argument, I've been hearing this for years, the Tesla killers. The reality is it's not happening. They're years out from really being competitive with Tesla. And I say that as if Tesla was going to stand still for the next 5 years. Obviously, Tesla's going to keep improving too. There is no way the competition can catch up.
My fifth reason is the fact that Tesla faces potentially a massive crisis around battery supply. In fact, Tesla's Gigafactory is supposed to solve the problem and help them produce at least 500,000 cars annually. However, the facility has not yet come online fully and is still not running at full capacity. And Elon himself has...
Okay, well, I got news for you. If Tesla has a battery problem and they actually are putting all their efforts into this and have secured the supply chains and suppliers, going out a couple of years, how is this going to impact all the other automotive companies who really are no idea what they're getting into with the battery shortage issues here? Once again, if this does become a serious issue, I mean, Tesla's already proven that they're navigating it much more effectively. Musk is navigating it much more effectively than the competitors, and that's only going to continue. So if anything, if there is another shortage, Tesla will come out of it stronger than any of the competitors once again.
Hinted at the fact that perhaps they're going to need several facilities like the Gigafactory to help them meet demand.
So once again, that is true, and Tesla's doing it all in-house, which will enable them to have higher profit margins and enable them to make better, superior products for cheaper than the competitors that are going to have to outsource a lot of this.
Now, reason number 6 may seem completely out of tune with the current situation, and that is the fact that low gas prices may indeed challenge the very grounds on which EVs are built.
All right, well, this is just simply untrue. If we look today, short-term gas prices are going sky high, which obviously is going to motivate people to go more for electric vehicles. But even in the long term, the point has nothing to do with the gas prices. The point is that we're getting off fossil fuels, whether you agree with it or not. I mean, this is the trends. This is what the government is pushing for, and also more and more investors, especially younger investors. And whether you agree or not with, the Earth heating up here, if you're like a flat earther or something, whatever, but there's no denying that breathing in all this carbon dioxide is proven to have many negative risks associated to it, higher rates of cancer, higher rates of asthma. You just look at, obviously living in a city, like living in a very dense city like New York City, you just look at the statistics, breathing in polluted air is not healthy for us humans. So if it solves that reason alone, it is well worth it, and electric vehicles are without a doubt the future. If you can't see this by this point, I don't know what to tell you.
And whilst the gas price is absolutely soaring at the moment, a lot of analysts are predicting that in the future the price could fall pretty rapidly, especially if supply is ramped up. In addition to which, many traditional automakers are still banking on combustion engines and they're focusing on fuel efficiency. And certainly if you look at the final cost factor, and combustion engines are still cheaper for the majority of people to buy, operate and own, then certainly this is going to pose a real threat to a company like Tesla. And just
combustion engines are barely cheaper. Tesla's actually probably with the Model 3 pretty on par with the average car price, I think, in the US. The Tesla Model 3 is already a competitive price, and over time, electric vehicles, as the battery technology advances, will become cheaper and cheaper. While on the flip side, oil is going to keep going up. I don't see oil going down. Why would OPEC start, pumping out tons of oil and hurting their profit margins? They're going to milk as much per barrel as they can. And either way, oil or not, we know that the ICE cars cost you way more in maintenance. There's so much more cost you pay just beyond the gas tank with an ICE car. There's always something wrong with them because they're not efficient. Electric vehicles, very efficient, very low maintenance. They hold their value much better. I mean, I can go on and on.
Just to bring some reality to the current gas prices, which of course are soaring at unreasonable levels at the moment due to many factors, including the war between Russia and Ukraine. But if you look at the historical Brent crude oil prices over the last 5 years, you'll see that most of the time the price is steady around $60. There are of course periods where the price falls way below, like for example here at the latter part of 2019 the price fell to $13 a barrel and to the levels where it's at today. However, over time the general trend is that the price of Brent crude will normally settle around $60 per barrel. And so even though we are going through an incredible period of inflation, especially when we are looking at our energy costs, I think that over the long term, this pricing is probably going to settle. Now, my seventh and final reason as to why you should consider avoiding the Tesla stock in 2022 hinges around the fact that Tesla cars are still extremely expensive. In fact, even with those incentives, Tesla cars are too expensive for mass market adoption, and traditional automakers and a lot of the new competition in the EV space is almost certain to fill those gaps.
Too expensive for mass market adoption. That's funny because why is the demand so high and it only continues to increase? Tesla increases the cost of their cars and they still, there's too many people that want them. I mean, what are we talking about with too expensive for mass market adoption? You can look at the statistics. The Model 3 is right there with the average vehicle price. And as we said, over time, the costs are going to come down. As the technology gets better, they can make the batteries more efficiently for cheaper. No.
With a $1 trillion valuation, Tesla's success as an electric vehicle maker is hard to dispute. However, there are still many potential hurdles to overcome. I personally think it is far wiser for investors to err on the side of caution.
So let me know what you guys think in the comments below. Tell me if I'm wrong here. I mean, please, I would love to debate in the comments below. Let me know your thoughts if I'm missing something here. But Tesla's in its own league. I don't see that changing anytime soon. You don't punish your winners. You let your winners ride. David Sachs likes to say that. There were naysayers for Apple the whole time. It's crazy if you look at the parallels with Apple, with the iPhone. Go back 10 years, read the articles. Maybe I'll do a video on this as well because there's tons of articles. This is going to be the iPhone killer. This is going to be the iPhone killer every year, and here we still are. Apple doesn't even need to hold a majority of the market. They can hold 20, 30% and still be the biggest company in the world. And this is a similar fate I see with Tesla, not even to factor in the 10 other possible trillion-dollar revenue industries that are built into Tesla, which we're seeing play out right now with full self-driving and robo-taxis, with solar power and storage, with AI and 3D printing and robotics. I mean, the list just goes on and on. If you enjoyed the video, please don't forget to like and subscribe and let me know your thoughts in the comments below. This is Vinny from the Investment Club, and I'll see you next time.